All right, we're back. And that means we're answering your questions now. First up, Stephanie Link. Jeff, in Boca Raton, Nike appears to be going nowhere. What do I do with it?
Well, it was one of the best stocks last year, and so it's taking a breather. It's only up 12%, but it is a compounder. This is exactly the kind of name that I want to own in this environment: the quality, good balance sheet, global brands, and I think it has lagged, and I think that's the opportunity. Actually, I prefer Under Armour because I think there's more upside to that, but I like Nike for the long-term holding.
Okay, Shannon, for you, George in Ottawa, FedEx. That's a good one to do right now. What do? Do you buy on the dip?
We've been trimming this stock. We think the integration of TNT in Europe is not going well. We think there's going to continue to be serious competition in this space, not just from Amazon, but from other firms that are looking to expand distribution. So we're trimming the stock right now.
Okay, Anastasia, for you, from Mike in New York City, the builders. What do you do with the home builders right now?
I think you definitely look at home builders. I think you add to home builders. I think that is the trade to look at least for the summer. Mortgage rates are down significantly from 4.7% to 4%, and we're starting to see an uptick in mortgage activity already because of that. By the way, next week is a big week for housing data, housing permits, pending existing home sales. So I think definitely one to look at ahead of it.
Liz Young, Matt in New Hampshire has a question for you about emerging markets. What's your view, given the global slowdown?
EM is still an important piece of a portfolio from a growth perspective. By definition, EM is always going to be a high beta trade, so it's something in the short term. While we have trade tensions, they'll feel those bumps. But over the long term, we do think we get to a trade deal, and we think that it's better than international developed.
All right, Josh from Don in Hawaii.
Oh, boy.
Hey, Don. Thanks for the question.
Aloha,
for
Scott.
Downtown. That's true. Sorry, Don.
Sorry, Don.
For downtown,
I'm sorry for Scott.
I mean, it was so obvious. I still messed it up. For downtown Josh Brown, is Dunkin Brands a buy?
I'm glad you asked me that question, Don. Look, I've been long this stock for like 7 years, and I have no plans to sell it. I think there's two things with Dunkin' worth pointing out. The first is, while it's ubiquitous on the East Coast and somewhat in the Midwest, it's in nowhere's land. In the West Coast, it's not a slam dunk that they'll be able to expand there, but I would make the bet that they would, and I don't think you're paying up for that bet. It's a great royalty, asset-light business. They don't own any of the stores. All they do is print money and drop it to the botright line.
Okay. Mahalo, Don. See? I fixed it.
Got that.
Did I fix
recovery.
it?
It's up to Don. I feel
All right, Don, tweet us to let me know, Don. Jim Lebenthal.
Might as well have said howdy. Like
It's bad. It really was bad. It's so obvious. I'm blushing now. From John in Wilmette, Illinois. Keep buying Winnebago?
Yeah. John, thanks for asking the question. I think the last time a question came in on this was the beginning of the year, and this was one of my top picks for the year. So here's the good news. It's up 60% year to date. Here's the bad news. It's up 60% year to date. This is a great long-term investment. Earnings are coming up next week. They're already baked in because competitor Thor came out with good earnings last week. So nibble at it, but this is not the time to go whole hog on it. Again, long-term, this is a great investment.